Stay ahead of the game with our weekly economic insights where we break down the latest financial news clearly and easily. Hi, I am Soumya. In today's video, we'll discuss the latest domestic and international economic developments to equip you with the knowledge you need to make better financial decisions. Today we'll talk about the different news stories that could affect your money, from simplified KYC norms for mutual fund investments to potential ups and downs in the booming real estate market. We'll also explore how IndiGo's regional flight expansion plans might affect the travel cost and why the RBI's decision to hold interest rates steady could impact your loan payments. Additionally, we'll get into the growing Indian bond market attracting big investors like BlackRock and the RBI's move to tighten regulations on gold loan companies. Both developments with potential benefits for individual investors and borrowers. So whether you're planning a trip, considering a property purchase, or looking to grow your wealth, this week's financial news roundup offers valuable insights to help you make informed decisions. Let's start with SEBI's new update on KYC. Great news for mutual fund investors. The market regulator SEBI has simplified the process of validating the KYC status. Earlier, you need to link your PAN with Aadhaar to get the KYC registered status required for mutual fund transaction. But now, SEBI has done away with the requirement. Here's what it means for you. If you have completed your KYC using an official valid document like Aadhaar, driving license or voter ID, you will automatically get the KYC registered status. This allows you to continue investing in mutual fund without any hassle. However, to get the KYC validated status, which allows you to withdraw from mutual fund schemes across all fund houses, you are still required to link your PAN with your Aadhaar. Overall, this move by SEBI makes the KYC process more convenient for mutual fund investors, especially those facing issues with Aadhaar PAN linking. Shifting gears to the aviation industry. Good news for frequent flyers and those living in smaller cities. IndiGo, India's largest airline, is exploring options to expand its regional network by adding smaller aircraft to its fleet. The budget carrier is discussing with manufacturers like ATR, Embraer, and Airbus to order at least 100 small planes suitable for regional routes. This move could potentially benefit travelers from smaller cities and towns, as IndiGo aims to widen its reach and offer more direct regional connections. By operating smaller aircraft on these routes, the airline may be able to keep fares relatively low, making air travel more accessible for a larger population. IndiGo already operates a fleet of 45 ATR-72 turboprop planes and will receive 5 more this year. The airline is expected to stick with ATR to leverage economies of scale. However, it is also considering options from other manufacturers to meet its ambitious expansion goal. While IndiGo's primary focus has recently been on international long-haul routes, the latest development indicates the airline's recognition of untapped potential in India's regional aviation market. If successful, it could open up new travel opportunities for smaller towns and cities' residents. Let us move on to the RBI's new take on interest rate. The RBI's decision on interest rate directly affects the common man's life. The RBI has decided to keep the interest rates unchanged because the inflation has been steady but still a bit high. The Consumer Price Index, that is CPI, which measures the inflation, went up by 4.83% in April compared to the last year. RBI also wants to control rising prices through the repo rate. The repo rate is the interest rate at which country's central bank lends money to commercial banks. A major reason for high inflation is the sharp increase in food prices, which rose 8.7% in April. This is partly due to the unpredictable weather conditions and hot summers. The upcoming general election may also influence the RBI's decision. For those who already have loans, such as home or personal loans, unchanged interest rates mean their monthly payments will not go up. Moving on to the real estate sector. If you're planning to buy a house or invest in real estate, this news is for you. The real estate sector in India has been on a roll, with the Nifty Realty Index delivering a staggering 110% return over the last year. This impressive performance is attributed to rising real estate prices and increases demand from home buyers. Experts say a few things are making this happen. Interest rates are staying low, making it easier for people to afford homes. Also, government programs like PM Awas Yojana are helping make homes cheaper. A lot of big investors are putting money into real estate. But even though it's a good time to buy, experts say there might be ups and downs. There are still more people who want houses than there are houses available. So while prices might keep rising, they might also decrease. Moving on to the RBI's new finance project. The RBI has proposed new rules for banks giving loans to builders. Under the new rules, banks must set aside 5% of the loan amount as a provision while the project is still under construction. Banks may charge builders higher interest rate to cover these extra costs. Experts believe builders may have to pay 1 to 1.5% higher interest rates on their construction loans. This could lead to delay in getting loan approved for new projects. The impact of these rules may vary for different builders. Bigger, well-established builders with good credit rating may not face any challenges. However, the impact could be more significant for small builders. However, this is some good news for home buyers. The housing market is currently doing well, with strong demand from buyers. This could help builders absorb additional costs without raising property prices too much. Let us move on to the RBI's take on gold loan. The Reserve Bank of India has directed non-banking financial companies to strictly comply with the norms in gold loan business. These moves come after the regulator discovered violation related to loan-to-value ratio, auction processes, and cash disbursement limit by some NBFCs. With the gold finance business witnessing phenomenal growth since the pandemic, rising from Rs 34,678 crore in March 2020 to Rs 1.31 trillion in March 2023. The RBI is reviewing regulations and tightening oversight. The RBI's move to tightening regulations and oversight on gold loan NBFCs can benefit common people who avail of these loans. Stricter compliance with these norms related to loan-to-value ratio, auction processes, and cash disbursement limits can help protect borrowers' interest and prevent potential malpractices by lenders. This can instill greater confidence in gold loan market for individuals. Let's see why BlackRock is interested in India's bond market. BlackRock, a leading global investment company, is targeting a larger share of India's massive bond market. The market holds $500 billion of government bonds, and BlackRock wants a 2% slice. Their strategy: invest through a recently launched India Bond ETF, that is exchange-traded fund, that currently manages $26 million. Here's why it matters for investors. More options. BlackRock's increased participation in the Indian bond market, particularly through ETF, could open up more ways for everyday investors to get involved. ETFs can be a convenient way to invest in a basket of assets like bonds, without picking individual ones. Growing popularity. BlackRock's interest isn't a coincidence. India's government bonds are about to be included in a major investment index, making them more attractive to foreign investors. This increased interest could potentially benefit the overall Indian bond market. Let us talk about how silver is performing. Silver prices have reached a record high, almost touching Rs 90,000 per kilogram. In just one trading day, the prices jumped by over Rs 2,000, a 4% increase, ending at Rs 87,476 per kg. In 1 month, silver prices have gone up by 5%, and over the past year, they have risen by 60%. This sharp increase is mainly due to the growing demand for silver from electric vehicles and solar panel manufacturers. As silver prices soar, many consumer goods and electronics that uses silver components may become more expensive. Luxury items like silver jewelry and decorative pieces could also become less affordable. Additionally, investing in silver-based financial products may become pricier for individual investors. Let us wrap up with this week's market performance. The benchmark equity indices ended the trading sessions positively on May 17th. The BSE Sensex climbed 253.31 points, while the NSE Nifty 50 gained 62.25 points. On May 16, 2024, domestic institutional investors bought stock worth Rs 2,127.81 crores, showing positive sentiments in the Indian stock market. On the other hand, foreign institutional investors and foreign portfolio investors sold stock worth Rs 776.49 crores, indicating a more cautious or negative outlook, which could lower stock prices. These investment flows from big investors give cues about market sentiments and can affect stock prices. That's it for today. This week's Economic Insight taught us about the significant changes and plans across different sectors. Amidst all these changes, one thing remains the same: the financial world continues to evolve rapidly. So stay alert, stay informed, and most importantly, stay focused on managing your money wisely.